Hey, how's it going, guys? And welcome back to the North Investor, where we all about personal finance on our path to financial freedom. Today, for the fourth episode of 1 year to beat the stock market performance, I will share with you my stock portfolio performance over the last 3 months and if I've been able to succeed in my challenge. But first, before to start, let's recap what were my personal objectives for this challenge. Obviously, first of all, I am aiming for as much growth as possible without compromising what is my defensive position. So in my portfolio, you will see that I have many value stocks which are pretty defensive and that are offering some great dividends. But obviously, I will be aiming to have more growth in the upcoming months in my portfolio. But still, since we are currently in a high inflationary period, I will be aiming at two particular stocks for the next month, which are Prologis and Johnson & Johnson. If you want to know why I will personally aim for those stocks, check out the video that I've made recently on the top 3 best stocks to buy in December 2022. But basically, there are some great defensive stocks acting in both the pharmaceutical sector and the real estate sector, which are two sectors that are usually often considered as some perfect edge against the inflation. After, the second objective of my portfolio will be to have a better diversification of my overall portfolio. For example, for my real estate sector, I have Ryokan, which represents close to 15% of my overall portfolio. And in the healthcare and in the services stock, I don't even have any kind of stock at the moment in my portfolio. That's why I notably want to buy Johnson & Johnson pretty soon. But also, since I've just told you that Ryokan represents about 15% of my portfolio, I want to be able to have a maximum allocation of between 5 to 10% in any stock in any different sector. And as you will be able to see, the main objective of my challenge is obviously to be able to beat the stock market performance over a period of only 1 year. However, in my total return, I will not take in consideration the dividend that I will receive from my different companies. Now, let's take a look at my portfolio. The first thing, as you can see, is that I still have about $10,000 to $15,000 in cash and in liquidity at the moment. For me, this represents a perfect buffer that I can use to buy different other companies, but also different ETFs. And since I am aiming to buy real estate properties in the next summer of 2023, I'll be using a certain part of this cash to buy the different property. Now, let's take a look at my overall portfolio by sector. First, for my technology sector, you can see that it hasn't been the best performing sector on my overall portfolio. However, since the last video, so since the last month, you can see that many different companies have been able to gain a positive momentum, notably Apple, Google, that have been able to come back to what were their losses in the last month. Unfortunately, you can still see that Meta, Amazon, Tesla, NIO, and Rumble are all really negative, about 20 to 30% of negative on all those stocks performance. And even the brand new stock that I've bought in October, which is Rumble, you can see that it is still down of about 30% since only 2 months. So maybe I've been wrong in picking this stock, but I think that it has some great potential of growth, and I haven't been putting a lot of money in this particular stock, so I've reduced my risk only about $685 that I've put in it in the beginning. Now, for the energy sector, you can see that both my two oil companies have been able to perform quite fairly since 3 months, but my biggest loser of my overall portfolio has been Algonquin, which has been down of about 43% since 3 months. And if you want to understand why AQN is down so bad, check out the video that I've recently made on the stock analysis on this company. Now, for my financial sector, you can see that all my different banks and insurance companies have been able to perform pretty well, about close to 10% for almost each and every single one of these companies, except the Nova Scotia Bank that is down of close to 3%. For my two companies in the communication sectors, you can see that for Bell and both TELUS, they have been able to perform quite fairly. And as you can see, there is only about TELUS that is down of about 3% since 3 months. My consummation company, which is Couche-Tard, is still performing super well, about 4% of return on the last 3 months. And my materials company, which is Savaria, is also doing amazing since that period, about 13% of return. Over that same period, you can see that my real estate company, which is Ryokan, is also performing pretty well. And overall, this is a pretty good news for me because, as you can see, it represents about $12,000 of my overall portfolio, so a big portion of it. And finally, my little mine company, which is called 5N Plus or VNP, has been doing amazing, about 70% of return over the last 3 months. It is pretty incredible, but this is a more risky pick, so it's why I haven't put too much money money in that particular position. But now let's see what has been the market performance for that period. To make the comparison, I've used the Nasdaq Composite, which is one of the best index to compare the overall market. At the beginning of September, you can see that the market was about 11,785 and now it's down to about 11,461. As you can see, it represents a diminution of about 2.74%, and for my portfolio it has been down of about 3.63%. So as you can see, it is slightly lower compared to the market, but after all and overall, after all those 3 months, you can see that I'm pretty close to the average market return. So I'm not able to outperform the market, but at the same time, I'm not that much underperforming compared to the market performance. So I've been down of close to $3,000 over that same period, and my portfolio currently worth about $77,560 at the moment. Now for my sectoral distribution, you can see that I have two main tilts in my portfolio, which are in the finance and in the technology sectors. Obviously, I will probably use a little bit of my spare cash yet to be able to buy different other companies in those sectors that I don't even have any kind of companies, like in the healthcare sector with Johnson & Johnson. But maybe I will also sell some of my big profit companies like Raucan, which I have been able to make a lot of profit overall over a long period of time. So I'll be probably reinvesting some of these profits in other different sectors, potentially in the consummation sector, and I could also reinvest it, as I told you, in the healthcare sector or even in the services sector as well. But overall, except that, you see the communication sector represent about 6% of my portfolio, which is pretty good. Consummation 4%, energy 13%. The finance represent a massive 30%, but it's a good news since the finance is a great sector to have in your portfolio overall when you're in a recession time. For the materials, it represents about 5% of my overall portfolio. And finally, you can see that the real estate represents about 16% and the technology about 25%. And as I told you earlier, I haven't made any big transaction during that month of November 2022. The first reason being obviously that I've lost one of my jobs, meaning that I have less liquidity that it is entering in my account. But of course, I also doesn't necessarily invest massively in stocks at the moment. I'm more investing in different ETFs. But on your side, if you're willing to see what are the best picks that you could buy right now in December 2022, well, check out the video that will appear on the corner right over here that share with you my top 3 stocks for December 2022. And guys, for everyone that is new, make sure to join the North family by subscribing to the channel for only $0.0, and I will see you soon. Peace!